once the market thinks or sentiments that an interest rate is at its peak, not yet talking about when it's going to go down, that's the upside in parentheses, but it doesn't increase anymore, I think that's when you will see transactions coming to market, because that's when you can set a price point and hopefully sellers and buyers will find a price that they both can agree upon. And I think, again, it's not so much where it stops, of course it has an influence on certain things, but it is that it stops going up and has a tendency at some point to go down. That will, I think, liberate the market and get transaction flowing again. ESG is a process. It's not a state of everything is different today than it is tomorrow. And we as a bank can help that process. It would, however, be foolish to assume that tomorrow morning we only have green asset on balance sheets and ESG friendly and we're all good. And I think that would be wrong. I think where we can support is in the transformation. Because I don't know if your hometown, how many buildings are green? Maybe 10%, 15, 20, 5. So it would be foolish to assume that I could, as a bank, only finance green buildings, because then the other banks would only have brown buildings, technically speaking, right? So I think it's a process where we want to and are supporting our borrowers in the transformation. Some buildings you won't be able to transform, but a lot of buildings you are able to transform or to develop. But what the green financing actually does is it puts certain conditions and requirements on our borrowers on an ongoing basis for the tenure of our loan with them. So it's not day one it's green and then afterwards we don't care. It is something you have to maintain. There are grading levels, there are certain duties that you have to fulfill throughout the term of the loan. And I think that is something that is both beneficial to our borrowers as it is to us, as it is to everything around us, and fulfills a very good purpose.